Hey everyone, welcome to our brand new Silver Hill Funding webinar. My name is Zach North. I'm the marketing director here at Silver Hill, and I'm so happy to see so many people registering and attending for this presentation. It's great. We haven't done one of these in a little while. I'm looking at everyone who signed in, and I'm seeing a lot of familiar faces or names, which is awesome, and a lot of new people too. So hopefully this presentation will be helpful. Maybe it's been a while since you've worked with us, you're not sure what we're offering these days, or maybe you're working with us regularly and just want to see what's new, try to connect with us and kind of get the latest info on some of our specific programs. So I'm joined here by Joe Altamonte. If you've met with us at a silver session in the past, you know Joe. We're hoping to do those again very soon and actually see you because it's been too long. So this presentation is called Small Deals, Big Earnings, Closing Commercial Loans with Confidence. And the objective here is to give you all the information that I think is just going to give you that confidence. We find confidence typically comes with experience, seeing the ball go through the hoop. And so we think that if we give you this information, try to position it in a way that's most helpful to you, not just telling you so much about us, but giving you the information as it might pertain to your business, we think that would be the most helpful thing. So hopefully you get that takeaway as well. And with that, Joe, why don't you introduce yourself and take us away?
Great. Thank you, Zach. And I'd echo Zach's sentiment. It's really great to be talking to you again. We know with the COVID break, some things at Silver Hill had changed, and we have come back, and we've come back very strong. So it's really nice to be able to talk with you all again. And as Zach mentioned, we just had a conversation about possibly seeing folks and doing some silver sessions and getting out in the field once again. So Zach included a quote from one of my favorite tennis players, one of the really great men of our time. One important key to success is self-confidence, and the important key to that is preparation. So that is our goal today, to arm you with the tools to prepare you to be able to close small commercial loans with confidence because you are prepared. Another quote I like to say is, a goal without a plan is a wish. So we're going to give you the plan as we go through. So we'll talk about why Silver Hill makes sense for you and your borrowers. Update you on our current product offering. When we came back from COVID, we started out slowly and then very quickly started to add product lines, and we'll talk about those different lines today. One thing that's near and dear to your heart is to understand how you get paid. It's flexible and it's lucrative in many cases. And then when we talk about preparing you and having a plan, understanding what fits our box in terms of properties and in terms of borrowers is very important. So not only is it important to understand what fits our box, we'll talk about in pretty good detail what doesn't. So how to help you weed through things that will save you time rather than submitting a deal for a letter of intent only to find out, the property type isn't up our alley. We can save you that time with some information today. We will go through what our closings look like right now with real examples of deals that have closed recently. Walk you through the process of submitting a deal and processing a deal in high-level terms, and then we'll talk about getting started. So some of you have contacts at Silver Hill. That's simply getting in touch with them, but Zach will also review with you how to reach out to Silver Hill to either start a general conversation or, even better, submit an actual transaction.
Hey, Joe, can I jump in real quick?
Sure.
I just want to say for housekeeping here, feel free to put any question you have in the question pane, that box. I see it. I'll just try to get to the questions. If we can't get to them this presentation, I'm going to give each one to a regional manager here so they can connect with you directly, answer your questions, no matter how specific they might be. The other last point is that I am recording this presentation and we're going to email it out to each of you tomorrow. So feel free to take notes, but don't be afraid if you miss anything, because we're going to give this presentation to you so you watch it as many times as you want. Thanks, Joe.
All right, so there's going to be evidence of everything I say. No pressure. Right,
I wanted to warn you. That was the true purpose.
All right. So why does Silver Hill funding make sense today? Well, many of you are aware of the Bayview family of companies. We're a subsidiary of Bayview Asset Management. Silver Hill is a small balance direct commercial mortgage lender, part of that family, and our loan amounts range between 100,000 to 2 million, give or take on a case by case situation on a variety of commercial properties. And we're very interested also in multifamily real estate. And as you'll see a little bit later on, even the investor properties on the 1 to 4 level are something that we have really strong programs to address as well. So why do brokers choose Silver Hill to get commercial properties financed? Well, we're a commercial focus. We're not a residential lender that has a commercial arm. Silver Hill is its own entity within the Bayview family, and we focus primarily on commercial properties. And we're wholesale focused on the broker. Silver Hill does not charge origination points. We do offer, and we'll go through this, I believe, either Zach or I will go through the structure of getting paid, but we offer the ability for you to earn yield spread as well as charge points up front with a fee agreement with your borrower. And then, of course, with volume and just sometimes because we feel like it, we will throw promotions available to help drive volume. So, but there's a wide range of eligible real estate. We'll talk about a wide range of ineligible real estate. That'll help you as well, save you some time as well. And we've been doing this a long time. We've been doing commercial loans in one way or another through the Bayview family since 1998. So we have a really strong background in this type of financing. For your borrowers, flexibility of income verification. So many times we are a great source of financing for borrowers that have been to the bank or a traditional sense of financing and have run into income issues. We are one of the few, and there's some copycats out there, and I don't blame them, but one of the few commercial loans lenders that offer a 30-year fixed. We do have other terms that are available. We can go up to an 80% LTV, which is strong for commercial properties. Alternative underwriting method for 1 to 4 unit. Now, when we talk about 1 to 4 units a little bit later, we'll talk about that underwriting methodology in more detail. But again, think of it this way. We're underwriting the property more so than the borrower in these situations, and we'll get a little bit deeper into that as we go through. Cash out is available on commercial property with, not a whole lot of monitoring of what happens with that cash out so long as somebody doesn't come clean out and say they're running to Las Vegas to throw it on 42 red. And we're a attractive hard money takeout solution. So I did see a couple of scenarios come through recently where borrowers had a balloon note due. So they had a loan with pretty good interest rate, but the fact of the matter, it was coming due after 3 years and they needed to get out of there. And if any of you remember us pre-COVID, our rates were strong for commercial. I think looking at our rate sheets now, I just find you're going to see our rates are strong, period, for many of these properties. So some really good benefits to both you and your borrower. So I did mention a flexible compensation structure for our brokers. We allow our brokers to charge up to 2 points origination fee. It's something you would agree upon with your borrower. It would be submitted to us as a fee agreement signed by you and your borrower, and it would be protected at closing. They don't have to come up with the cash out of pocket outside of closing for you. And then yield spread, up to 2 points at 3/8 of a point per point. So ideally, in a tough situation and you have some leverage with your borrower, you can make up to 4 points on a loan. Just for a sense of what we typically see between 2 and 3 and a combination of both. So maybe a point up front and 2 on the back, or vice versa, or 1 up front, 1 on the back. That's typically what we see. 2 points is probably the most common that we see come through us. YSP is paid outside of closing, so your borrower will not see that disclosed on the closing documents. And sometimes our brokers like that, because, when they are charging an upfront origination fee, they don't want the borrower to be too aware of the entire compensation there. Now, our Alliance program, I mentioned that we have some incentives for folks that send us in volume. And you can digest this in two ways, looking at it on the screen now. But basically, when you close more than one transaction with us in a calendar month, sounds like it's pretty easy, but again, this is commercial, so it's not as common as it would be in your residential business. And have that funded volume that you see in the funded volume section, you can earn free points, so basically free yield spread. 2 loans in a month, your next month you would get an extra quarter point yield spread. 3 equals a half a point. And then if you're closing 5 with us, or again, the volume, hit the volume threshold, that will also qualify you for the par pricing of 2/3 of a point. So it is a really good incentive to say, you know what, I think I'm going to go with Silver Hill as my commercial partner for all the deals that I think work with them, because if I am closing 1 or 2 loans or a high volume with them, I can earn a little bit of extra money without having to pass that on to my borrower.
Cool. So thank you, Joe.
Yep, go ahead, Zach.
Great.
I'll take it back over to you.
Steps on your line there. Yeah, I'll take it over from here, and what we're going to do is just walk through some of our product offering today, try to make it as simple, as quick as possible. We know you've got a lot to do nearing the end of the month here, so not going to keep you forever. Just want to show you what we're offering, what makes sense, why brokers seem to like it, and we'll get started. So the thing about us now is I've really been with Silver Hill since we launched in 2015. And so as Joe mentioned, when we first came back following COVID, being on pause during parts of COVID, not everything was available. And I can say now that Silver Hill is back to the lender you know and hopefully love. What that means is that we have our full doc programs, but we also have our light doc solutions, and we have our alternative doc solutions. So what you see here is we have our full program, sometimes called complete, which means the borrower does submit tax returns and in return gets our lowest rates, very competitive rates that we're offering today. But we also offer our light doc investor program. This one is a classic for us because so many brokers and borrowers seem to like it, and that's for investors only. No tax returns required. We're looking at rents. And then an alternative solution, that owner-occupied bank statement program, is only for those owner-user deals where we're looking at 12 months of business bank statements in lieu of tax returns. I have that over on the commercial side because we have a growing number of solutions available on the 1 to 4 unit investor side. Sometimes we call this an SFR program, although it's not only for single family rentals, but duplex, triplex, fourplex. What you see here is we have what now we're really referring to as a DSCR program, and you'll find out in a second why. But this is our really strong solution for these 1 to 4 unit investor properties where, like Joe said, we're taking a more commercial underwrite on the property, and that allows us to get approvals for a lot of things that fall out of agency approval. And then one of our newest solutions is our portfolio loan product. The terms are very similar to our standard 1 to 4 solution, but you're seeing that this program is available for either five or more properties and a $500,000 loan amount. So we've got a pretty wide variety of solutions today. We think this fits a lot of the type of business that hopefully you're seeing right now. And Joe, you can go on to the next slide. Okay, so yeah, I'm not going to go through each line here. This is generally what you see with Silver Hill. I'll point out what might be newer. So recently we've increased our max LTV to 80% on purchases with FICO over 725. So if that's the situation your borrower's in, you can get an LTV up to 80%. We know that's a good option there. Minimum FICO at 650, You can see with our minimum DSCR, different for investor and 1 to 4, for our investor commercial versus investor 1 to 4, investor 1 to 4 down to 1. And then also you're seeing our minimum rates there. And so our lowest rate for commercial at 5, and then for 1 to 4 all the way down to 3.875. So I think we've got very competitive rates today. And I think even more competitive would be our fee structure, because as you can see there, for commercial, all you really have to think about is that $3,500. No origination points. We kind of make it easier for you to charge the way you want to charge. If you actually attended our last webinar, which is called Pricing Power, I went into a lot more detail here. But essentially for us, we're interested in making these loans. We're not interested in creating a convoluted pay structure that hurts you and your business. So we kind of give you the flexibility there by making our fee structure quite simple, I would say. And for the 1 to 4 units, it's a flat fee. So we're not getting in the way of the origination points there. And lastly, a prepayment fee, as kind of the way Silverhill's always been, that these are it's more about permanent financing for us. Our borrowers aren't typically getting out of these loans early, and so I think the prepayment fee kind of reflects that. Loan amounts the same, a purchase cash out, rate term refi. Of course, we always see a ton of cash outs, but seeing a lot of every type of loan. And then, of course, with the 30-year fix, like Joe said, at the time when we launched this, it was a brand new concept for commercial loans. And I've seen in other places, I think just because, and we don't mind, because it's just a really good idea, and it's something that a lot of borrowers really want. So I think that's just a quick rundown of what our general terms are like today. And Joe, you can go on to the next slide. Okay, so this is the only real deep dive we're going to do on the product set, and it's about our DSCR program. And so why I kind of put this together is just I wanted to kind of give some detail into how this program works and how we built it, because we think that this would help you kind of see the value in it and help you position it as maybe a new part of your business if you're not already doing these types of deals or you're not doing them this way. And so for us, this DSCR product, we call it this because it's really an alternative to the types of agency financing that a lot of borrowers may think is their only option. The problem is that they don't always get approved, as I'm sure you know. This is typically because they don't pass that DTI calculation. Capped out, maybe they have more properties than the agency program allows. Maybe they don't want to produce tax returns. Maybe they don't want to use their own income. There are a number of reasons why that typical agency loan is not going to work for the investor that you're working with here. So what we've done is we've created an alternative where we're looking, our underwrite is based on the DSCR and not the DTI calculation. On the right, you can kind of see how that works. We're looking at gross market rents, and then and over PITIA, or the principal, interest, tax, insurance, association dues. And that's where we're coming up with the calculation, not looking at the standard DTI calc. And what that means is that a lot of investors who did not pass the DTI calculation are able to get approved. And I think brokers are seeing the value with this, because, and the reason I know that is because in the second quarter of this year, 1 to 4 loans in our pipeline more than doubled. So it seems like it's a popular product. The value proposition is there, and hopefully, I've made it sort of clear enough here. If this is a newer type of product for you, or maybe you're not really doing this on business today, hopefully this makes it a little clearer what the value is. And how you can position it as a fallout solution. So with that said, I think, Joe, is there anything else that you wanted to mention here, or did I cover it pretty well?
Very well done. Nothing to add.
Good. I should hope so. Okay, at this point, right? Okay, so you can move on to the next slide then. Thank you. Okay. So what fits the box and what doesn't? So what I've done here is I've tried to, we obviously get reports every month. We look very closely at fallout, at approvals. Of all the submissions we get a ton of submissions every month. We want to see what's working and what's not. And the reason why is so that we can make it clear to our customer, give you more tools so you understand better, and also get the answers to you faster, so you're not left wondering. And we think this increases certainty. This helps you feel more confident, and helps you feel like you're not wasting your time potentially, or putting yourself in any kind of danger with the relationship with the borrower, which I know is so important for you. So Joe, you can go on. What I've done here is I've listed some attributes for success and common pitfalls. Nothing probably shocking here, but hopefully I'll add a little bit more color. And what I'm showing here for success is that there are a couple components that these loans seem to have in common. And even though our minimum FICO score is 650, as I'm sure you can imagine, most of our pipeline in these loans have credit scores over 700. So strong credit matters, especially when you look at how we arrive at our rates. And our rate sheet is driven by LTV and FICO. On the next slide, I'll show you how exactly that works. But that's what drives our matrix. And so when you have that understanding, I think it just makes it really easy to understand how to price deals at Silver Hill. And so obviously credit plays a big part in that. In the same way, like I just told you, we have light doc programs, we have alternative documentation program. One of the reasons why loans come to us is because borrowers don't want to produce a tax return, or other types of documentation that like perhaps a traditional bank would require. Yet still, when borrowers are able to show that or do have that consistent, stable, verifiable income, that just makes it so much easier to underwrite the loan. So we see a lot of these deals, even though we've got a great mix in our pipeline today of light doc, full doc loans, their willingness to provide that information it goes a lot further and helps that approval come a lot faster. And finally, strong property condition. Very important in any situation, but especially these commercial loans. We're dealing with a lot of different types of properties that can require deferred maintenance in different ways. And so strong property condition just goes a long way. If you've closed a commercial loan before, you know that the appraisal process is more complicated than residential. There's a lot more that goes into it. The document itself is huge, more expensive, and so that's a huge part of it. And so the better the property, we see it all the time. This is going to really make it easier for us to approve that loan. And in a mirror to that, you can see the pitfalls. What we do is we create categories of why loans fall out, so we can kind of understand better what's going on, and if there's something that we need to make clearer or something that we need to communicate with our customers, then we kind of get the idea here by what we see fall out. And these categories are always at the top or near the very top. And typically it's property demographics. We don't lend in very rural areas. You can think about the top 200 MSAs for us, and so overly rural areas are just not going to work for our program, and that's often a reason why a loan falls out. In the same way, an ineligible property type, I've listed some of the most common ones where maybe that's special use properties like an ice rink or something, new construction, hospitality, healthcare, education, adult entertainment, churches, cooperative ownership, assisted living. We have those kind of boxy type properties that work well for us. It's one way I've heard one of our regional managers explain it. And so some of these special use properties aren't going to work. Often an ineligible property type will be the reason a loan falls out. And finally, of course, credit guidelines, as you can imagine. So to the left there, I've listed our eligible property types: multifamily, the single family 2 to 4, mixed use, retail, office, warehouse, self-storage, light industrial, automotive, which we see a lot of success with. Not everyone offers that, and mobile home parks. So we've got a wide variety of commercial real estate available for you to close on. And then also these single family rental 2 to 4 family that are an increasingly large part of our pipeline, which has been really exciting to see. Joe, you can go on. So this is what I was talking about here. This is our current rate sheet. If you do not have a copy of this, and it looks a lot better in the version my team makes for you, but this is a very basic look at it. But if you don't have one on your desk, you don't have one saved somewhere, definitely reach out to your Silver Hill regional manager. They'd be happy to give you a personalized version, so that you always know who to contact. we try to give this around because this is what really matters, right? So you can see here in my red boxes that on the X and Y axis you've got LTV and the credit score, and you see this is how you get to those best rates. However, I think you can see that at different points in this matrix, you still have competitive rates, even when the LTV isn't the lowest and the rates aren't the highest. What's new here, and one way to tell whether you have an older version of our rate sheet, minus, of course it's dated, so we try to make it easy, but you can see that 80% LTV is there. And so that's not available at every credit score. And as you can see, it's for purchase only, but it is there. And so we've gone back up to 80%. So it might be a good idea to check your rate sheet after this call to see if that's reflected there. And if not, someone would be more than happy to give you a new version. And Joe, I think you can go on.
And Zach, just to confirm, the tier 1 properties and tier 2 properties on the official rate sheet your team creates actually lists which properties fall under which tier, correct?
Oh yeah, definitely no mystery there. On that rate sheet, if you've seen it, we list those tier 1 properties, which happen to be like multifamily and the SFR, and then the mixed use with the primary residential, and then the rest are listed as tier 2 properties, which are the standard commercial ones. So yeah, it's easy to reference on our actual rate sheet.
Cool.
Okay, so closed loan case studies. These are always fun because I get to show some real deals. I think it's so valuable to see the pictures because the way it was explained to me when I first started was like, see, like you drive past these buildings every day. And sure enough, it's true. You do. And so I've highlighted 3 here in different parts of the country. It used to be that long ago, it wasn't always easy to find a good example of a 1-to-4 deal, but now we've got a ton of them. And so it was easy to grab a solid 2-to-4 unit, a deal we just closed in Marietta, a very pretty area in Georgia. You can see 30-year fixed deal. And what I highlight here was that this broker made, doubled their income on this one because they took advantage of the promotion we had recently run for 1-to-4 deals. Hopefully on this call, we have other people who were able to take advantage and make some extra money on these loans. Because that's a great thing and that's what you want. So that was a cash out too. So you're kind of getting a sense of why the deal worked for us. Next to it there, you've got a warehouse deal. So in Illinois, and this is a big one for us. As you know, our max loan amount is $2 million. So this is an over $1 million deal. You've got a good LTV there. This borrower wanted a 5-year term. And the broker made good compensation. What I wanted to highlight also was on this loan, the borrower had the rate of 5%. So a good rate for that for a big property, large loan amount, 70% LTV, 5-year deal at a warehouse. So I thought that was a good deal to highlight. And in the same way, the last one in California, this multifamily. That's most of our loans are multifamily. It's always been that way. So this is actually a purchase at 75% LTV. This borrower was able to secure a 5% rate for 30 years. So that's good. I mean, obviously they've got long-term plans for the property. They saw a low rate and want to take advantage of it, and so they're good. And so this to me is like a success story for everyone because the broker made good comp on it. Borrower got a good deal. They've got that deal in place for a long time. And I think that just helps get their financial objectives moved forward. And I think that's what we're all trying to do here. So I think that's a good success story and one I wanted to highlight for sure out there in Stockton, California. So with that, Joe, I think I'm going to toss it back to you, right?
Awesome. Thanks, Zach. Yeah, there's great examples and some creative ways that the brokers made their commission. So awesome examples. So thank you, Zach. So let's go a little bit into our transaction process. If you're new to how we do things, or if you're a residential broker that's branching out or just wants to help your self-employed borrowers, it is a little bit of a different process, and it's not so much the regulation-driven process that residential is, where a lot of automated stuff is going on for disclosures and whatnot. Here it is fairly more simple but different. So with our full doc, we have a commercial application that you can get from your account manager, regional manager, or a 1003 with a personal financial statement, plus a loan supplement form. I would say the easiest thing to do is get set up with your account manager, your regional manager, and get a application from them. It's probably the easiest thing you can do. But because you probably have 1003s from a lot of your residential borrowers, there is a way that we can accept a 1003 with some additional information as well. Well, you're all familiar with a tri-merge credit report, a rent roll. This is something that in full doc, we just looking at this real quickly. We're not looking for leases in some cases, but a rent roll for multi-tenant properties of who's paying what in what unit, how much, and of course, making sure that they're current on that. Profit and loss statements for the last 2 years and year to date for the property. So not necessarily for their entire business if they own multiple properties. A purchase contract if it is a purchase, of course. And for the full doc program, we'll look at the last 2 years of tax return. So that will also yield you the most aggressive rates. A lot of information there. But these are all things that in a lot of cases you're dealing with when you're verifying income on a self-employed borrower for a residential loan or dealing with a business owner in many of your other transactions. The bank statement program is really helpful for borrowers that, self-employed borrowers that may take liberties with their filing of their tax returns and what their tax returns show in terms of income, to try to, keep Uncle Sam out of their pocket. And then at the end of the day, it might not look like they're profitable. However, of course they are. And the bank statement program will show the cash flow. So same thing with the application and credit report and rent roll, profit and loss statements for the last 2 years. Everything is the same. The difference being, instead of tax returns, we'll accept 12-month business bank statements, and we're looking for obviously positive cash flow. So just because they have bank statements doesn't necessarily mean they're going to get through underwriting. And then as you talk through with your regional managers, they can give you their insights on, what that positive cash flow should look like for each particular property. Hard to list that on a presentation like this because it can differ depending on loan amount, depending on type of business, and so forth. And then our Light Doc program is just that for folks that just don't have a lot of things to share in terms of income. And, so the first 3 or 4 points are the same. In fact, the first 5 points are the same. Light Doc, we don't look for any income verification in terms of tax returns or bank statements. Of course, the difference is going to be reflected in the rate and terms of the transaction, and it will be limited in the things we can do that way. So another note at the bottom, I'm glad Zach put in there, because it looks like we have at one point up to 70 attendees, so I'm sure many of you worked with us before. No more unnecessarily mailing. Silver Hill has plunged full on into the DocuSign world, so you can sign your documents that way. So happy to share that news with you. Okay. So, and then the process stages. All right. So LOI, letter of intent. We do not issue what's called a conditional pre-approval that's anything near binding. Some of our account managers can give you a letter with terms and maybe estimates of things, but it's non-binding. It's just so you can dangle in front of your borrower and say, if you give me this information, this is what I think we can get you. But it's nothing that can be put to the test. But on a case-by-case basis, we can put something like that in front of you if you need it to convince a borrower to go through the process. Otherwise, when you do submit that application, we will get the letter of intent out to you. When we receive the signed letter of intent and conditions, then we're going to go ahead and get our third-party reports, title, appraisal, background checks, environmental screens, if needed, credit report, and then we have an online portal where you can submit payment for the upfront fee, which typically is going to mirror the appraisal at that particular stage. Now, you can get in, best way to learn about the appraisal process is through experience. These appraisals, depending on whether it's a 2 to 4 or a huge warehouse or a multi-unit strip mall, are all different. So, but we typically control that process. While we order the third-party reports, we get into the conditions update. All right, so our processors will review those, send you updated condition lists if anything's have occurred. Be patient. Setting expectations with commercial properties and businesses involved, and sometimes multiple businesses involved with commercial properties, things do change. Things come back to us that, through no fault of anybody's, yours, ours, even the borrowers, are different than what the deal initially looked like. We have the intent of closing deals. We're not looking for ways to kill them. We're protecting ourselves, and things do change in the process, and we'll be patient and hope that you can be patient as possible. So after we do receive the completed appraisal, we'll then do a full report and issue a pre-approval letter. This is, at this point, it's an official document, but this is after all those conditions have been met. It lists the docs if we still need anything else to finalize the underwriting process. Once we get those docs in, we go to final underwriting and makes the final approval decision. If we've gone that far, the final underwriting decision should not be much of a mystery. But again, in commercial, it's a little bit more volatile than it is in the residential world. So the best case scenario is just doing as much work, as much discovery, as much information finding up front so there are no surprises later in the process is always helpful. One tip I like to give is if you can ever obtain interior and exterior pictures, it should be easy these days, prior to submitting a loan, so you are comfortable that the property is in good shape, inhabitable, you can avoid a lot of headaches later in the process. And then we'll fund the loan after the borrower signs the loan doc, and we review all documentation. They are typically dispersed within a day of closing, and then YSP might be an additional day or two following that, but funding does not take place typically immediately, but within a day or so from the closing, as soon as we can review all the documents from closing. So we try to simplify it as much as possible, but the one expectation we like to set is the more you know, the earlier in the process, the smoother the process will go. That's a word of advice from our team. So I will shift this back to Zach, and he will take you through how to connect with our team and start the ball rolling.
Awesome. Thank you, Joe. So I think we started with a good why, why choose us, went through the what, like what we're offering, what kind of products are available, then explain how it works, hopefully what to expect if when you do transact with us, work with us on a closed loan. And now, I want to show you how to get started. It looks like a big heat wave across the country, but actually this is where we do business. We've got our regions in different shades of orange there. You can see we do business in most of the country, and you can see we've got professionals here to work with you who specialize in your region. Hopefully you have a relationship already, and this isn't news to you, but if you do not, I really encourage you, fill out a contact form on our website. I've tried to make it as easy as possible for you to get in touch with us, to raise your hand and say, hey, I want to talk to someone. I want someone to get to know me and my business, and we will pass that directly on to the person who can help you most. I've got a really good sales team here. They understand commercial, which is the most important thing. So So they know your business, they know what you need, and they know what kind of issues you're about to run into or that you're worried about, and they can help navigate those with you. So definitely go to that link there, silverhillfunding.com/contact-us. That's where you see the same map. That's where I pulled it from. But if you roll your mouse over each state, you can see who our representative is there, and you can start to get the contact information you need to reach them. And like I said, if you don't know, if you're not sure who to talk to, fill out a basic form, or email me znorth@silverhillfunding.com, and we'll be happy to connect you with someone so you can start working with us. That's what we want. Joe, you can go on to the next one, please. Great. So these are our rate sheets. I hope you have them. If not, again, reach out. More than happy to send these to you. On the left, you see that's our commercial, our standard pricing matrix, and on the right is our SFR / 2 to 4 unit family rate sheet. Very in depth here. This is all the information you need. Also, not just the rates, but also basic terms, compensation, everything you can expect. I'm showing general versions here on this presentation, but for the ones that you would get, on the lower right, to have the contact information for the rep in your region, so you know exactly who to talk to. I would check. I mean, maybe you have an older version. Just reach out, and we'd be happy to update that for you. And not only that, but to walk you through each section, because just looking at it here, there's a lot. We have to put a lot into this document to make it fit. So it helps to have someone kind of walk you through the areas. And so our sales team would be very happy to do that with you. All right, so I mean that's our presentation. I've got some questions that I'd be happy to answer here, but what we really want is for you to just feel confident about Silver Hill, feel confident that we understand your business, what you need, and feel confident sending us those scenarios so that we can get them in the process and help you close some loans. Hopefully, commercial is a big part of your business. This year, typically when we do our surveys, it's we get people who do a ton of commercial all year long. And we've got people who've never done a commercial loan, and they're just looking for some basic information to even see whether they want to give it a shot. And so we fully expect, people to be at all those stages and any of them in between. So don't feel like you need to learn something before you get in touch with us or anything like that. Our team would be happy to work with you and happy to get to know you, help you grow this year. So with that, I've got a few questions. Joe, sorry to leave you on the hook here. I'm gonna read the questions and answer them. And if you have anything to add, feel free to jump in. But
Sure.
A few questions here. First one, of course, will we get a copy of the recording? Yes, definitely. I'm going to email this to you tomorrow, and it's going to be on YouTube so that you can watch it easily, pause it, take notes, do whatever. We're going to give that to you tomorrow. So here, let's see. What is the max LTV for 650 FICO? I think you can see that in that rate slide, that would be at 70%. That's what we have for that LTV. Population requirements. I mentioned the top 200 MSAs. Like population is always a factor with us. Rural locations are always a factor with us. We're looking for more densely populated areas, and that's typically a reason why sometimes a loan might not work with us. So that was a good question. Here, how to get your rate sheet? Like I mentioned, if you reach out to anyone that are listed on our website, they will help you. Also, you can easily just drop in a comment on our contact form and just say, hey, I would like a rate sheet, and you'll get one right away. So a ton of different ways. I could probably just send it to the person who asked also. Might be the easiest thing to do. Let's see, any other ones? Pricing calculator. Yes, we know this is a helpful tool that you guys really took advantage of earlier. We're updating that, making it a lot more user-friendly than it used to be. And so I'm hoping very soon that's going to be made available. I understand that was a very useful tool, and so we're pushing to get it back, but not just back, but improved. I would say where you're able to compare different types of pricing, and so it should make the experience a lot better for you. So I'm pushing to get that completed with the team as fast as possible and back into your use. And let's see here. I have a question. Would you do a funeral home? No. The answer to a bunch of questions is it depends, like what kind of structure it is, what it's actually used for. But typically that might fall into some of the, depending on the type of funeral home or what happens there, could fall into more of a special use category. But kind of what we recommend is to just ask the questions, get in touch with someone, and they would have the follow-up necessary to get you past that "it depends" answer into more of a concrete answer and perhaps some information you could use for the other scenarios you have. So even if that one might not work, I think it's worth asking your RN, if you your regional manager, if you know who that is. And let's see here.
And Zach, I'll add
yes.
to that too, if you don't mind. When you do ask them, they've been, I'm looking at some of the names on this slide. They've been doing it a while. They might know, they might be able to recommend you somewhere. So, that's why it's also important to ask them. And, for funeral homes in general, typically if they're doing the embalming and all the, that stuff there, we're not going to be interested in it. But, that doesn't mean other lenders are. And we oftentimes refer specific deals to competitors where we know they do something that we don't. So don't be afraid to ask.
Right. And also I'd hear about tools, because you talked about calculators, talk about other tools. We have unbranded marketing material that you might find useful, that, in the form of flyers, rate sheet, product sheets, not rate sheets, because that's more up to you how your pricing works, but kind of property list, program type sheets. We make these available with neutral colors so they fit with your logo, your contact information, because, I know exactly how long it takes to make this stuff and how hard it can be, especially when you're so focused on every other aspect of your business. We want to be there for you and help you. So we do have these unbranded materials. Reach out to your Silver Hill regional manager and ask for that. And they'd be happy to connect you, give these resources so you could just, work on what you do best, which is growing these relationships, finding the deals, closing these loans. You don't have to worry about using Photoshop or learning how to use some kind of design program, because hopefully we've done all that work for you. So, with that said, Joe, it's been really nice connecting with the brokers here. Hopefully you guys learned something today. Hopefully it had some value for you. If you've got follow-up questions, again, I really invite you to connect with us. I see some specific kind of scenario questions, and our team specializes in answering those. And so they'd love to connect with you and take the next step. So invite you to do that. Joe, thank you so much for taking the time, and maybe we can give everyone 10 minutes back. What do you say? What do you think about that?
I think that's a great idea. But I'll say thank you to everybody as well. And without wasting more time repeating everything you said, what Zach said, please get in touch with us.
That's the best way to end, isn't it? Okay. All right, everyone. Have a great rest of your day. Hope to hear from you soon. Bye, everyone.
Thank you, guys.